Gold prices seeing a big two-day move, almost 4% from the lows of yesterday to the highs of today, as we nudged up against those year-to-date highs. But we did see a modest pullback heading into the close. So we're just above 1420 on a settlement basis. That's the highest we've seen in a long time. You got to go back about 6 years. So this is starting to look like it is more than just a knee-jerk move, because obviously we saw that initial move higher, than the sell-off, then now a secondary rally. And gold right now finding favor as you see yields in treasuries continue to go lower, equities making all-time highs, maybe feeling a little top-heavy, and gold, which has been on the rise here for the last several months, maybe seeing some opportunity if the Fed comes in with easier policy. Maybe they cut more aggressively than the market anticipates. There's a lot of reasons, all the geopolitical risks out there that seem to kind of get put by the wayside. And I think at this point, gold buyers are going to benefit not only from what we see around in other markets, but I think initially from gold, which sort of lost its luster for quite a long time and now is gaining it back. So we see gold prices on the upswing and momentum building. And if you look at the dollar, this was not a dollar gold rally that we saw. Obviously, the dollar's been weaker ever since the Fed started talking about making any/more rate cuts. But today was not one of those days. We saw the dollar kind of trade sideways today, holding right around the dollar index, holding right around the 200-day moving average. So today's rally was not about the dollar getting hit. It was not about what if, because right now the market's fully priced for the Fed to cut rates, and the fact that the global central bankathon of lower, easier policy is going to continue. So right now, dollar and gold sort of separating themselves a little bit. We have seen that growth move together. But today the dollar just really wasn't any effect to how gold traded higher. And lastly, let's look at the positioning. We have last week's numbers only. We won't get this week's numbers till Friday. But at this point, it looks like the speculators who were big and massively long look to have possibly gotten out a little too soon, maybe sold off on that, or got out on that sell-off, but I think they quickly got back in. Part of the reason why we saw that big jump of close to 4% over the last 2 days is speculators now want to get back in. They don't want to miss that next tranche higher. So at this point, speculators may have been temporarily covering some of their longs, but I think they got back in very quickly as gold momentum now seems very strong to the upside. And with a central bank like the Fed looking to cut rates at the end of this month and possibly 2 to 3 more times over the next 6 months, that means gold prices have a big upside ahead of them.